Hey, what's going on, guys? It's your boy MC Fire. We're coming at you again with another Sunday recap. Love our Sunday recaps because essentially we get to talk about what's going on in the market for the upcoming week. It is January the 26th, so let's get right into it. All right, diving right in. So we have our bar charts here lined up. If you guys are new to the channel, we essentially like to check out a couple of really big, really main indicators. That being a lot of times the ETFs, and seeing where most of the volume is, if it's going in and out of a certain sector relative to the S&P 500. So what you're looking at right now is essentially a 1-year performance of the S&P 500 and its corresponding ETFs, right? Healthcare, utilities, financials, consumer services, energy, real estate, consumer staples, materials, consumer discretionary, info and tech, and industrials, right? So making up primarily most of the SPY there, you can kind of see what sector typically beat the SPY, what sector is slumping. And as it sees right now, all sectors are kind of raising with the tide, right? SPY is kind of in an uptick, so all boats are raising kind of with that tide in retrospect. Not too much rotation, not too much divergence, right? You do have some winners and losers, right? You do have in this case consumer discretionary, info and tech, financials, communication services, and industrials kind of tracking with SPY. So if you look at those are going to be your primary ones. I think also utilities is up here a little bit too. Let me take that off the board. Yeah, utilities is also slightly beating SPY. A lot of times it kind of just depends, right? So these are your outperformers, and we'll bring them to the front of the classroom here. I'll get rid of everyone else. These guys are good. Bye. Bring them to the front of the classroom. This is kind of how we like to use them. So everyone that's around or above SPY that is highlighted currently, and you're seeing that if you want to look for winners, look in the winning basket for like right here. This is also a good chart to see in the past what typically outperforms the S&P 500. Doesn't necessarily mean it has to maintain that. It just so you could track and know what performs better than S&P 500. So let's say, for example, okay, I know what performs better than S&P 500. You got info and tech and communication services and financials. Typically will track around or slightly above. So let's go, if you want to know what the basket is inside of that ETF, here we'll bring it to the front of the classroom here, shift it over so you guys can actually see what's going on. I won't shift. We'll zoom out a little bit. Guess it won't zoom out a schmidgy. That's unfortunate. I hope you guys can see that. So we'll just scroll to the top here. I'm kind of looking to see what you guys can see. So what we have pulled up here is real estate. So what all I do is just come in. I just change, what we're looking at. XLF. We'll start there. Financials. Financial ETF. And then if you scroll down to where it says holdings, it'll pull up your holdings there. We've got Berkshire Hathaway. These names, if you guys have been in any of our Sunday night videos, this is the place where you come and we kind of get our cheat sheet for a lot of those, right? So that's kind of how we do our thought process in putting what we want in our basket of things that are tradable. Now I have all the ETFs kind of sectioned out, at least the ones for their sector sectioned out. But this is how you would do it. If you ever want to do research and you say, okay, what's beating the S&P 500 on average? It's going to be, you'll be able to see that, and you'll have data that essentially proves it. See, so XLF, we'll go to one that we know typically beats the average. We'll go to the XOK. And you're going to see that the basket that's inside of the XOK is a basket of well-knowns, right? NVIDIA, Apple, Microsoft, AVGO, Salesforce. Sorry. Apologies. Oracle, Cisco, and plenty of others. You got AMD in there. You got Qualcomm, right? Texas Instruments. A lot of these names you guys know and love. So the crazy part is these are what's pushing a lot of times the SPY, these ETFs all stacked, right? S&P 500, Standard and Poor's 500, right? Some of the 500 best stocks. And then if you break down the sectors inside of the ETF, which sectors are doing the best, you can focus and concentrate. This sector has probably been over the course of last year and this year outperforming the rest of the market. So we've uh, we've definitely been watching this. You might also know that we like tracking the Qs, which is another ETF that is very closely tied to tech, right? The technology sector. To go over, it's almost who's who, with the exception of like Google, Meta, like some XLC stocks. Now we can go pull up the XLC now, just to kind of show you communication services. And I'm doing the same thing. I'm just searching the ETF, going to holdings, right? You got Meta, Google, Netflix actually crushed earnings. If you watched the last Sunday video, we brought you guys a hot take of this one, and it did extremely well, right? Take Two, Verizon's there, Warner Brothers. Hello. Sorry, a lot of really good companies in here. So it's no wonder that this has pretty much been crushing it. Now, if we go to the charts, we're going to start looking at the charts now. Um, Essentially, that's kind of how we like to start. But for those of you who just want to look at the potential setups, bear with us while we pull up the news, because the news is actually very important going into next week. So before we get to the charts, apologize. Now we're gonna have we're about to have the Fed chair meeting this week, so the 29th. So essentially in a couple days, like 3 days, we'll be having the Fed chair meeting. The probability that the rate is going to change is extremely low. Currently, the range is 4.25 to 4.5, and that's probably going to stay 4.25 to 4.5. So don't expect too much change there as regards to your Fed funds rate. Okay. Next on the lineup is trying to click this one here. Next on the lineup is this bad boy. We're going to go to next week, which is January the 26th through February the 1st, right? Let's see what we got. I'm looking at it with you guys, so don't think I skipped ahead and did anything like that, right? We're doing this analysis together so you can see it real time, right? Full disclosure. So Wednesday, you got crude or Fed funds rate, right? As we told you guys on the 29th, that's what's really going on. We also have crude inventories, but really this is the sticking point: Fed funds rate and FOMC statements, right? As planned for the minutes. Also you have unemployment claims Thursday, so watch out for that. And then unemployment cost index is Friday. So hot takes a lot throughout the week, especially on Wednesday through the end of the week. Monday and Tuesday, if you're going to be day trading, you don't necessarily have to watch out. Not too much is going on. But on the weekend or Wednesday, Thursday, Friday, towards the end of the week, definitely watch out for sure. Okay. That's your news. It's pretty straightforward. We get it from the same spot, but really, we don't use the news as a trigger. We use it more as hey, heads up to get out of the way, as a first sign of danger. So if it's a first sign of danger, your trigger to trade is kind of just seeing what the market does in response, and you catch the catalyst of that move. So we're going to go to our in plays, and we're going to see what necessarily trouble we can get into, right? We're going to go look at all the in plays because it's a Sunday video, and we like to kind of take our time with that, right? There's not too much going on since Friday, but what I want you guys to note is just because we don't have that many in plays doesn't mean things don't develop during the week. So definitely stay tuned for the rest of the week. We like to let the market tell us what it's going to be doing, right? So as you can see already, this Southern play already started to push already. Now we did give you guys a heads up on the Southern play, Southern company that is, and it's in a downtrend, nice juicy rip, right? And if you guys know anything about our setup, there's your entry for Southern. We guys told you about Southern. We passed on Southern to take Dominion, okay? And when we did that, it went pretty pretty good in our direction, right? Almost out the gate, getting 71% on that play the first day. So we typically expect our plays to work for 2 days to 3 weeks. So we prepare for them to be 3 weeks, but if they work out the next few days, awesome, right? So Dominion essentially ran, but we also were looking at the Southern. Similar setup, we're shorting the rip here. It's in a downtrend, ripped up. There's your setup candle cross below the low. Nice follow through to the downside. Now it did kind of bounce back up here, but I would expect it to still hit lows. Now remember, we keep it pretty juicy, keep a pretty tight stop. So we're a 2-bar professional, but here we respect all of our sellers starting at 85.49. That's where I would say necessarily we're looking for the stop. Then you have Verizon. Now, Verizon's a little bit of a different picture, right? There is a rip in Verizon here. Sellers did step in, but you also have to take into account that was because of earnings. So getting out of the way of earnings is pretty good. We have profited from earnings before, but it can be volatile. So just make sure you set your risk accordingly moving forward for stuff like earnings, right? There's certain plays to take for earnings. We won't go over that right now because we have covered that previously. But a lot of the earnings plays, you can. Some people say, oh, some people cannot trade earnings. Some people do trade earnings. It's a mixed bag across the industry. My thing is, the stock's going to do what it's going to do. And earnings or no earnings, as long as you set your risk accordingly and the different, like what's in play volatility wise, you should be just fine. Okay. KO. KO is very, very similar to kind of what we've been seeing across the board. The market's pushing up, but some name brands, we got some setups that are definitely looking to the downside. Like I said, Southern Company, Dominion, Coca-Cola, same thing. You're getting these downwards trending stocks that are setting up pretty nicely. So they're in a downtrend, nice rip. You want to take that rip, short that rip, so to speak. Now we want to short it below 38.60. The reason why is a couple reasons. Number one, moved into the moving average cloud. So if you took it on earnings day, that's fine. But this would be ideal if it breaks. So we maybe take it down to the rotation there in open waters. Let's go look at some Union Pacific. So a little bit of a different look here, right? We had potentially a setup to the downside, but if you notice, it's setting up for a nice kind of channel. We don't use channel necessarily as a setup, but it's just good to see the overall pressure of the market. So I'll draw that out what I'm seeing for you guys, and maybe you guys can agree, disagree, put in the comments whatever you think. But essentially, I kind of just see this as a channel, setting up as a channel to the downside there. Boom. So it's kind of rotating, but it's rotating in a downwards with downwards momentum. Essentially, that's kind of what we like to see. That's why our lines don't have to be super perfect. We just want to like visually be like, oh yeah, this thing is definitely not respecting 21 and the 8 period moving average is kind of crossing below it. So we just want to give it some sort of structure, right? So we kind of know what we're dealing with. And then now that we've identified its trend, identified its structure, then you can take the setup accordingly, right? So you can say, okay, yeah, this is in a downtrend, but it's got a very wide berth rotation. Cool. If we see it cross below this new setup candle, you could take a potential trade to the downside, take that potential trade to the downside, and stop out at the high respecting your buyers, right? I think it's totally normal. Now, how would I play this though? I would play it, take the short, and then first sign of danger being the 8-period moving average. If it blows through the 8-period moving average, maybe target the lows. That's how I would play that. We got Merrick. Now there is a forex play on the board. I don't know what these little lines are. Maybe you can hide those. Let's see. Okay, cool. Yeah, so essentially, right, you could see in a downtrend. That's why we just look at the weekly chart as a higher time frame analysis. Let's just identify our trend from the higher time frame. So the trend is put in by the weekly. We just use a pretty standard 8-period moving average, 21-period moving average to identify that. And then we come over here, slap over on the daily, and we see, okay, you're in a downtrend and there's a slight rip with a lot of setup candles over here. A lot of setup candles here. You can see that indicated by the squeeze here. So if it breaks below the low, we might be able to take that play to the downside with plenty of room for 6J, right? Looking at the yen here. So watch out for that. Plus, it's kind of in line with what the 6J has been doing, right? If you look back historically, let's go back here. Overall, just huge selling to the downside. Massive, massive dips, massive dips, right? Little rips turn into pretty massive dips. A lot of selling. So it wouldn't be out of the realm of possibility to see this at least go back and test this low. That's the idea. Next on the list is Merrick. So Merrick, same very similar story, but really Merrick is a really good way to illustrate what we're trying to accomplish here. So let's go pull up Merrick, bring it to the front of the classroom here. You see Merrick sets up in a downtrend, right? The downtrend is established over here. But then on Merrick, you see you got earnings here, got it. But right here in Merrick, there's a setup candle. You're in negative territory, red territory. You got a green candle, and then as it crosses below the low, massive follow through. That's kind of what we're looking for. You're in the wrong zone, right? You're set up in the wrong area. This is a downtrend, and people are stepping in with ferocity to the upside. Now, if they get caught off sides, then they're going to have to let go of their position. It just makes sense to. One, you're off sides, you're already losing money. Number two, it's in a downtrend, right? Number three, you're in a very statistically dangerous position because typically best time to buy is when moving averages are stacked close together and the price action is right there before it expands away from that moving average. Once it does that, that's when you want to kind of be taking profits or making a decision, whatever you like to do, reducing risk typically. Very similar story happens here as it rips back up into the moving average, right? I would necessarily put my entry here if it breaks below the low here, which it does, and I put my stop out at the high here, right? Now, the beautiful thing is because we respect all of our buyers and we set our risk accordingly, I don't really have to just, unless I see something change with the technicals as regards to a trend change or a overwhelming fundamental shift in, like, let's say the company, or an overwhelming fundamental shift as regards to news catalyst. But that's what it would take. Other than that, keeping your stop is part of our discipline, right? So you definitely want to bend but don't break your rules. So there's your stop there. If you got the entry, cool. You take the short as it drops, slightly pull back up, never hits your stop there, and then ends up falling through the floor there. So shout out to if you held your stop through Merrick, good for you, right? A couple opportunities to take some profits probably right there, and even on the block candle on the rally there, you could probably look for taking some profits off the table. But here is definitely a spot where you're like, hey, this is a block candle. People are stepping into the downside a little late, and it's far away. You got wide moving averages. We'd be looking to get out of the way of that, right? This is also another candle where you want to take that play to the downside. So you see a rip, crosses below the low, and there it goes. Boom. Stop out where? At the high. Respect all your sellers in this case. It follows through. You probably get an opportunity to take some profits, and then it even kind of slightly pulls up here, but your stop's up here. So if you did take profits and you didn't move your stop down, well, you get more follow through. So I wouldn't say winner takes all or nothing. There is some bending, but no breaking of your rules there. We're gonna go to good old Chipotle. Chipotle, you kind of see the setup developing as is. New downtrend established, that is established on the weekly, not the daily. New established on the weekly here. You do have a setup candle, so if it breaks below the low there on Chipotle, we could definitely see some downwards potential, right? Downwards potential in Chipotle. I hate to see it though, because we love Chipotle. We love our Chipotle. Chipotle is good. Keto was good too, but Chipotle is good. So yeah, I could see it selling off, maybe even a 3 ATR, being it's a little volatile as of recent. You've got Freeport-McMoRan. Freeport-McMoRan, similar story here. Downtrend kind of been established, finding the rip here and then taking the short at around earnings. Not too bad. There's a squeeze currently present, but we don't like to necessarily buy too far away from the moving averages. We want to short close to them. So just something to watch there. So Moving right along on the hot take, I've been looking at a lot of more of the Chinese companies in their stock, as maybe China might be able to recover from like this huge catastrophic blow there, right? Maybe they'll figure it out and get it together. But as of now, Alibaba in an uptrend with a nice pullback. Now, the reason why I say it's an uptrend, even though the moving averages have crossed red, is because look at your 21 period moving average. 21 period moving average is not going negative. It is currently going positive. So yes, this cross negative. Yes, I could say okay. We are in a quote quote negative downtrend. We are in a downtrend according to the rules, but this is more of a caution area. You get what I'm saying, right? So this is more of a caution area because your 21 period moving average is trending upwards. We kind of lean into the 21 period moving average as law almost. But all this means to me is be mindful that if we go back into a downtrend, this setup will be pretty keen to watch, right? Yes, the moving averages are negative, right? They do have a death cross, but there's a setup candle here for trades below that. Then we could see some. Then there's justification to take it to the downside. Until then, no need. Boston Property Group. So Boston Properties, same thing, same story. Downtrend. Setup candle to the upside. Watch earnings coming up. That is going to be a factor. Boston Property Group, watch earnings coming up, definitely a factor, but there's a setup candle there on Boston Property Group. CACI. Now, we've been watching this for a little bit. There was an opportunity, what we call a reversion to the mean trade down here. Could have taken it at 3 ATR, going back up to the 8 peer moving average on the weekly. That's like our first sign of danger. And it kind of coincided with what? This support level. So, in reality, we kind of did something similar to that in a UNH, just to kind of bring it to the front of the classroom so you know that this is what we like to do here. UNH sold off pretty massively on bad news. 3 ATR tap. It's one of the requirements. Now you start seeing setup candles get washed like this one. We take the trade, take it off at the first sign of danger. That's 8 period moving average. Also, there's no the level was 543. Excuse me. So once it hit the first sign of danger, we went on and took it off. We don't like to bet against the trend. So if it's in the direction of the trend, then we like to leave it on, let runners go. But as a rule, when we're betting against a trend, I don't necessarily like to leave a whole bunch of runners, leave a lot of money on the table. It's just not good practice, right? Just take the higher probability trade, which is getting at least to the 8 period moving average, as the price action likes to come home to the moving averages. And then outside of that, let it go. But that's kind of the example there that we want to bring to the front of the classroom for that. But that did happen for CACI. No necessarily new trades for CACI. If you notice, there was a opportunity to, as it ripped, right? You are in a downtrend, right? So you see the setup candle here, and then massive failure, massive follow through there, about $50 move there. So it's something to pay attention to, right? The setup, I'm telling you, like it gets you out of the way of, if you take the reversion to the mean, it got you out of the way here. And then you're looking also for a potential downwards play here as it breaks the low. Now it gapped. There was a slight pullback, but because of the gap, we didn't want to chase it. That's kind of the point. We would have loved to take this trade to the downside, but we're not chasing. We're not chasing that gap there. So to halfway fill the gap, you could take the play to the downside if you're watching it all day. We didn't do that, but we did shut it out for you guys. That's for sure. So we've got DT, right? Kind of a newer uptrend. Remember, I say newish uptrend because it was acting like the 21 was going to go neutral. You did get the 8 slightly crossed below that there, but the crazy part is the market's going to do what the market wants to do, and we're looking like we're in more of a distribution pattern, right? Nice juicy rip, but wide berth rotation, going back up into the resistance right here at 56.57. So because it's pulling back and it went back up into resistance, it is respecting those zones. And that's what you kind of want to see. You see it put in market structure so you can take the potential play to the downside. So what's the trend? The trend is rotational. Okay. So now if I'm looking for a potential trade, just like back here, if well you didn't know the trend was rotational back here, but let's say for example you had a sell biased, then I'm just looking for a trigger, break of that low there, boom, failure, right? Looking for the buy there. I got a nice setup candle there, looking for rotation, take the buy, stop out at the low, respect on my buyers, maybe 2 bar professional. That would be like right here, right? Boom, stop out right there, and then it takes off to the upside, right? So not too crazy there. I mean, it just kind of makes sense. So how would you do it now? Like, let's say for example, you had a sell bias, you think it's going to go rotational. Just make a plan to stick to it. It doesn't have to be that difficult, and you're not going to be perfect. So make the plan. If it breaks 54.88, right, take the sell and cover at 50.26. It's not financial advice. I'm not telling you what to do with your money. I'm just telling you how I talk through the process of setting up trades, taking trades essentially with limited information. We don't know what's going to happen, but we see some rotation coming into the mix here. Where's my stop out at the high? If it breaks my stop and goes to the downside, it happens. It's happened before. Shout out to MU, right? Meta going to the stratosphere here. Nice juicy blowout candle. You got a squeeze essentially firing off, and I consider this more of a, how can you put it? When I see this pattern, it's not like an actual pattern that most people would agree on, but this is a push, slight pullback, and then another push, right? You get a nice what to me is a squeeze through here. Actually, it is a squeeze, an actual squeeze. You see plenty of squeezes right there. So as it comes into this valley, definitely getting some squeeze action here. Just fires off to the downside, but really I see the squeeze right here. It's not denoted here. The way the squeeze mechanism works is the Bollinger Bands come inside the Keltner channel. If the Keltner channel is wide, right, the Bollinger Bands are gonna, it's gonna be easier for them to get inside of the Keltner channel, as indicated by here, right? Volatility increase, so the Bollinger Bands have an easier time of getting inside the Keltner channel. That's what's going on. So you guys can look all that up. We're not going to talk about that here, but shout out to John Carter if that is something that you guys absolutely like. SoFi. So SoFi, another block candle here. When I start seeing stuff like this and stuff like SoFi earnings coming up, it's already made a massive rip, and you see this. Now would be a good time to cover, like I call it my block candle. So your block candle was actually around here, and taking some off the table is what I probably would have did if I was in SoFi. I'm not, but if I was, shout out to you. If you are holding or you're in SoFi, shout out to you. But definitely risk, be a little cautious. We're way for the moving averages, all-time highs area. You're getting a lot of people stepping in late here, so just watch it. They're sticking their nose out, and they might get a little pullback, or just could keep going. TEM also looking like it wants to perch on top of its moving average for the 21. But overall, I still consider this to the downside. So you've got negative moving average cross. I'll mark that out for you guys on the weekly here. If you guys are watching our plays, negative moving average cross here, and then it rips up. So now we're looking to do what? Short the rips. If it doesn't work, okay, cool. If it does work, okay, cool. But we're going to set up plan. We're going to stick to it. So if it breaks the low, then we take the play, and then cover kind of when it hits the lows, right? Essentially. If it doesn't, then if it breaks and then it comes back up, our stop is respecting all of our sellers in this instance. The sellers would be 56.61. That's where our stop is. So those are your in place. There wasn't that many, which is fine. Like we don't have to always have a whole bunch. But the crazy part is when we do have a lot, it can be a little bit overwhelming. So we like to sometimes have a few days where it just gives us enough that we can handle. So let's go take a look. So those are just your hot takes and your hot plays right there. Okay. Definitely watch out for some of those downwards setting up plays, especially like the 6J, looking like a whole snack there. You've also got Coke looking like a snack there, setting up, respecting this. So if it breaks, it really could get some runnage to the downside, right? It's got some space, but we could really see a drive to the floor if that continues there. Same thing here. Already kind of started to push outside the moving averages, but Southern, we did tell you guys about that last week. So we're kind of just recapping that for Southern. So watch these guys, right? Watch those. Let's hit the SPY, let's hit the Qs, and let's look at the Russell. So shout out to the SPY as it stands right now. Not looking too bad, kind of approaching all-time highs. There is going to be some pressure going into this Fed chair meeting. I mean, as you can see already, a little bit of a slump there, and we can kind of go take a peek at it. Yeah, a little bit of a slump already, preparing to go into the Fed chair meeting. So just watch that. I mean, the market can be a little skittish. They know they're not going to probably get their Fed the rate cut unless they have an emergency meeting, and then you know something's really wrong. If they have an emergency rate cut, then we can really be worried because like what's the reason for you having an emergency rate cut? You already said that you weren't going to cut rates, and then now you're going to emergency cut it. Then I would definitely be super careful. But yeah, massive selling off here, so watch it. This is Meta. What are you doing, Meta? What are you doing, buddy? Why are you here? I literally told ES to punch in there, right? Very similar. It's selling off, so that's why it threw me for a loop. But yeah, gap, a little bit of a sell-off there. Actually, a bit of a sell-off there. So watch that. A lot of a sell-off in the ES. We're going into the week where the Fed chair meeting is, so just keep that in mind. But the good news is it does make for a potential pullback into a buying opportunity. If you get a setup candle as we come into the wave, right, it's got a lot of support it can catch here. Setup candle, break of the high. That's what we like to see. That's bread and butter right there. Let's go take a dive into the NQ. That's you. So beautiful NQ kind of doing the same thing, very similar story. A lot of times they track almost 1-for-1, but nice gap there with a nice slick push. The cool thing I like about even on the day charts, the setup works kind of the same. If you understand rotation, you understand when it goes into trend, you can almost tell like, hey, even at VWAP, it reacts. We have certain plays where it reacts around VWAP, and this is kind of one of them. As you can see, it pull is pushing, right? Downtrend identified here by the double moving average clouds there. And then it pulls back up into VWAP and then throws you a nice juicy setup candle where what you do is what? Stop out at the high, right? Take the rotation to the downside. Now there is follow through there, but for us, it will just be, hey, you're going rotational. You hit that 2 standard deviations. Bye-bye, we're done. So runzo. Now it does push through that, but you can start taking some profits there, right? That's kind of what we like to do. Similar methodology. It works very similar. Again, here you're betting against a trend. So what do you do? If you're betting against a trend, as it pulls back up, 8-period moving average, kind of let it go. And then now you got set up candles to the downside. This one probably not taking that a little too wide, too much risk to reward there. I didn't want to take that. And I don't think you get any other setup candle. It's pretty much downwards all freaking day. So it went imbalanced. It might catch some support at 21,340. That might be the place where it starts to catch some support for the NQ, right? And previous levels there will actually change that from red to white there because it's no longer all-time highs. And then we'll go ahead and put the all-time highs as red here. Boom. Yep, there it is. There it is. So that's what we got. You can also put a level here. I'm going to go ahead and do that because it's tested that a couple times, right? So putting those levels there, coming down, setting that for rotation, but it doesn't necessarily have to respect that level, right? These are invisible lines in space, and price always has a choice, right? To respect your invisible line or not respect your invisible line. It's beautiful. We'll go to IWM as well. Look at the Russell ETF. Remember the canary in the coal mine? That's the guy. that we were watching to see if it gets above this major level. Get that out of the way. Get above this major level at 226.62. For the last 3 weeks, we've been telling you guys if it gets above that, that's kind of our get out of danger area. So be careful, because the failure could go all the way down here, kind of being a heavy drag on the market. We didn't want that. So shout out to the Russell for getting above that. But with the we're seeing the ES and the NQ kind of sell off. The Russell is in tandem selling off already at we've got what is it, about 1%. So Dow and the Russell are still about 1%, and this one is 0.83%. We'll pull these guys up to the front of the classroom here right now. Got the Dow Jones, we'll pull him up. So he's pulling back a little bit. Dow Jones is doing a little better, right? Relative to the IWM. So Dow Jones, shout out to Dow Jones. Had a nice pullback, and then now juicy rally there. So we're waiting for our setups, though. You see it's an uptrend. You get a nice red candle right there across the high, stop out at the low. Now, you do get stopped down here before it rips. It happens. It happens to the best of us, right? This one, it doesn't necessarily happen. You take this nice little dip right there as it starts to rip to the upside. You take the buy, stop out at the low, respecting all of your buyers. There it is. And then, boom, you really, really rip it to the upside. So watch stuff like that, Now that we've kind of covered the majors, let's go ahead and pull over to what we like to look at, which is the sectors, right? I love looking at our sectors. So we'll start with consumer discretionary. Consumer discretionary, not too crazy there. We've been, if we go back over to this bad boy right here, you'll see consumer discretionary. Let's pull it up. Leading the charge, right? The light blue there, consumer discretionary leading the charge. Coming in next is communication services, followed by financials, info and tech, and utilities, then the overall market. So we're starting with the big boy there, consumer discretionary, right? Boom. So consumer discretionary, we've got Amazon, Tesla, Home Depot, McDonald's, right? Lowe's, O'Reilly's, Chipotle, Nike, Starbucks, and TJX. So looking like a little bit of a mixed bag. This is on the daily. Let's bring up some of these weeklies, and then we'll make sure we save it this time. A lot of lines on those weeklies there. We'll zoom in here, get a good view. A lot of lines on those weeklies, though. Bring these to the front of the classroom, just making weeklies. Sorry, I was doing a class with a couple with my brother, and I just told him that you can essentially do this on the daily or the weekly. It's just a good way to find the overall trend. So I moved everything to the daily, and I never changed it back. So bear with me here. But the crazy part is you can see like on the weekly, what's the status? Double green, double green, double green, yellow, yellow, right on these pullbacks. Looks a lot different than, like, for example, Nike. Nike's just in the dumps, right? You see this double red even on yellow, but everything else is really pulling. So Nike's really, really struggling. You can look for sales on rips inside of Nike. We can actually bring him to the front of the classroom here. About 2 shakes of a lamb's tail. Everything else is trending decently, right? Decently. Pretty decent. Look at that. If you could see that, is my head blocking it? Yeah, a little bit. It's blocking it a little bit, but yeah. TJX, we'll bring him to the front of the classroom because my head was blocking him a little bit. He's in the bottom left corner there. So let's bring up Nike to the front of the classroom. Cool. Kind of to the point, case in point here. Nike, pretty major sell. You see the sell there, a little late, a little farther away from the moving average. We don't like that. We like to catch a rip above the moving average in a downtrend, failing through the moving averages. You get it outside the moving average, you might be able to pass it up a little bit. But nice rips up here into the moving average cloud, these are valid all day. You take that. Now you do get stopped out anyway, but there's another opportunity here that you don't necessarily get stopped out of after earnings. So Nike, just had to be a little patient on that before a little bit of the dip. So just keep that in mind there for Nike. But yeah, huge sell-offs there in Nike, especially on this rip. You would have made a lot of money there. Also, right here, probably would have made a lot of money there. A lot of money on this one right here. This guy, huge, huge payout. Same thing here. Now it gaps. I remember looking at this. This one gapped, and we're like, yo, like it just didn't give us an opportunity. It was perched up pretty. Nice moving average cloud. Rip into it just didn't give us an opportunity to go ahead and play ball with it. So it is what it is. But it essentially was like right here, and then it ripped down almost to 3 ATR. So shout out to it. But yeah, we would have loved to catch this nice little 2-day, 3-day play. Would have been really, really sweet. What else we got? Oh, TJX. That's what we're going to talk about. So you guys can see it. Yeah, nothing too crazy. Pretty much makes sense, right? Waiting for a setup candle for us to get some edge. I'll scroll over to the right. But yeah, you could take it from a traditional standpoint if you didn't already, right? Moving averages up, you could take the buy, stop out at the high kind of deal. We did that for OKE. We essentially took the play with no setup candle, just from a traditional standpoint. It's above the 8 PM moving average, and it crossed above the previous week's high. We took the buy, first sign of resistance, took some off the table, and as it really started pulling back, respecting that resistance, we went on and closed it. It doesn't mean it's not going to push higher or anything like that, but sometimes it's just good to take the base hit and keep it going, right? You live in the world of abundance. The market is a place of abundance, right? High demand equals high traffic, and you guys are going to catch some plays. You don't have to necessarily hit each one home run triple, right? Just get on base and keep it pushing. So that's consumer discretionary for you. Let's tap into, we'll just do the majors for today. We'll go ahead and lock in communication, the communication components. Really, you're looking at Meta, Google L, Netflix. You got Disney on there. You got 2Live, Comcast, Charter, right? You got Verizon, AT&T, and T-Mobile. These are your big boys, right? There's obviously other ones in the XLC, but we want to just take the top, right? Just copy off somebody else's homework. He says these are the best ones to play. Cool, play them, but we'll play them our way with the IOU system, right? So a little bit similar story, like double greens everywhere as they should. But the reality is there's some opportunities, especially when you look at Disney Charter. We took a couple plays on that, absolutely went bananas in that play. And then overall, the XLC, you should be fine in the XLC if you're taking buys on dips. Buys on dips is pretty good. Now the laggard, you have to watch the laggard. Verizon in a downtrend. So watch Verizon ripped into his cloud and now potentially could be selling off. But AT&T though, look at that, man. Let's bring him to the front of the classroom. Loving that for AT&T. Excuse me. Charts. Thank you. What did I miss? Oh, it's just T. Sorry. You'd think, right? So AT&T, nice pullback, juicy setup. Take the buy above there, right? We're in green territory. There's a red. You take the buy, stop out at the low. Nice rip. Now, the reason why we didn't take a buy on AT&T, even though we're seeing this every day, we get a setup candle when it gets pulled to us because of our scanner. We don't take stuff like this because we don't have to catch every play. We were already in quite a few plays to the upside as is, like quite a few. Yeah, XLF, OKE, ETN. You had D to the downside, and then AMD as a buy bias. So we wanted to get into some more plays to the downside. Remember, we have AMD as a buy bias as well. So because it's buying, right, we did take some profits off the table there, right? Let's bring him to the front of the classroom. Oh, we can't yet. Can't yet do that either. Sorry. So yeah, when you go look at let's see, AMD, this is kind of what I'm talking about. Nice juicy buy bias. We take some off right around the 8 PM moving average, and it responds to it, starts pulling back off of that 8 PM moving average on the weekly. It really does respect the power trend. It did it a few times. 1, is here, 2 is here, 3 is here, right? The reason why we have no problem getting the buy bias is we're looking to the left and we're also asking ourselves, am I willing to accept the risk on a company like AMD when it's pulled back almost 50% from highs, right? The 227 at high, and then we're averaging in at around 118. Come on, man. Like, what are we doing here? AMD is still a good company, and we like the fact that we get an opportunity for a major pullback. But we like stuff like this. We like when you get in, and it just has a fire sale, right? Nvidia kind of did the same thing. If I can type today, Nvidia kind of did the same thing, right? Absolutely had a fire sale around this area, and we took the buy. We're like, oh, okay, nice. You wanna have a fire sale? Sweet, we'll take the buy. You have our dry powder ready. AVGO kind of did the same thing. Fire sale back here. Definitely picked up some around the same time period. But then we saw the setup for this bad boy, and then we took the same setup and then made a wash after post earnings. So post earnings, absolutely cleaned house. We were there for that. I think post split too. Yeah, post split, post earnings, all the good jazz, and it's absolutely ripped to the upside there and is approaching kind of playing with highs there. So there's opportunities for stuff like this, but you're going to catch it here if you're watching this channel. So definitely stay posted. But man, let me tell you, man, that was one of our favorite plays there. Now we've got Charter. We kind of dissected that one plenty. But really in the communications department, the ones you want to watch for pullbacks, Meta, Netflix. If you watch our Sunday video, at 26 minutes and 22 seconds. We told you guys specifically watch Netflix for a major play. We told you how you could possibly play that. Then it ripped. Okay. So can't say I never we'll bring him to the front of the classroom, but can't say I didn't warn you, right? Boom. Right. Can't say I didn't warn you. We told you guys Sunday. There's a setup right here. What I liked about this setup, let me kind of explain to you the methodology, right? You're in an uptrend. Confluence number one. Confluence number two. Pulled back into the moving average cloud. That's confluence number two. Number three, you respect the support. Nice. Number four, two setup candles kind of stacked in the same area, but they're really making higher lows. That's confluence number five. Now we're just waiting for this, right? So things could get super highly volatile, but either way, right? It as it crossed above on earnings, took the buy. Even on the first day, it was massive, going from 870 all the way up to 918. Massive rip. And then not only did it do that, it gapped and it opened up at almost close to 1,000. So seeing that on Sunday, being able to catch something from 860 up to 1,000, would you guys be okay with that? I think, like, like getting it from Sunday. Now, we did not take that play because of religious observance. That's the reason why we didn't take that play on the earnings day, right? Because we would have to buy it here, and we didn't do that because we weren't trading that day. But that was the one to watch out for. You also have TTWO, Two Live Nation, right? Nice pullback into Two Live Nation. Charter Communications starting to push outside of its tight moving average. Disney starting to push outside its tight moving average. You also get T-Mobile pulling back in there. Let's bring him to the front of the classroom there. We're giving you guys heads up. It's kind of just like a radar to know, okay, what are we looking for here, right? You have a setup candle here, stop out at the low. It does rip slightly, gets above this resistance zone, but be careful, right? We're hoping to see maybe we can get another look at it, another setup candle. We got earnings coming up, so watch out for that. TTW will bring it to the front of the classroom. Boom. TTWO, a nice pullback. Now, what I do like about TTWO is this is in an uptrend. It does have what appears to be buyers stepping in. Now, there is a squeeze. So ideally, we'd like to see a tight little red candle. And if we get that cross above the high, we're definitely taking that play, right? So TTWO, take two would be really, really nice, right? You got Disney pulling back into their cloud, Charter pulling back into its cloud, or it did We'll go look at that real quick. So Disney, no setup candle there, but again, buying the dips can't really go wrong as long as you have a plan, right? If you go traditional, above the 8 p.m. moving average and above previous week's high, that's not too bad. Then you have a charter there, boom. There was a setup on charter though. And we kind of shouted that out. We were buying other stuff, but there we go. Right. Setup candle there, cross above the high. You could take that play rip to the upside. It already is doing numbers as is. So would you be okay with buying at 346 and it's already up to 367 with the setup? $20 move. Nothing to scoff at for sure, right? And right here, I mean, we pretty much did massive numbers doing the same setup. So we're liking what we're seeing. Nice pullback in Charter Communications, and it's already making you some money. Look at that. If you're already in it, right? If you're not in it, don't chase. Please don't. Please don't chase. Please don't chase. But yeah, getting it, watching our Sunday videos when things are pulling back is going to be extremely important. Let's go tap into what's next on the list. Financials. Yeah, let's go talk to financials here really quick. So in the financials department, we made a pretty massive play in financials with the XLF. Crushed it on like 5 contracts there. Absolutely took off there. But the setups inside the XLF is kind of what gave us the playbook there. We had setups essentially. It was peekabooing setups for Goldman Sachs that had already fired, Morgan Stanley, BlackRock had already fired, Wells Fargo had already fired, and JP Morgan Chase, right? Those were the ones that we were looking at. We talked about that considerably last week. So XLF is still kind of in play, at least the highs. That's kind of the idea. Not seeing much meat on left on these bones, though. Morgan Stanley at highs, looking like it's slowing down a little bit. BlackRock was a little late getting out of the gate there. Verizon at highs, Wells Fargo kind of triggered, kind of tipping highs. Bank of America, same thing. So you guys are kind of seeing there's not much meat left on this bone unless Berkshire can get out the gate and BlackRock can get out the gate and really carry the XLF to the upside. We'll bring the XLF to the front of the classroom. We still do have we still do have a play. We like to stay in uptrend as long as possible. So we did roll these contracts, but the setup is pretty much there. Remember, we had to buy it late, religious observances day. But taking this buy off the dip was masterful. If I do say so myself, told you guys that let it come down and pick you up sometimes if you want to get a nice fill, which it did. I think we might be able to. No, we can't do that. Bring it to the front of the classroom. But if it went to pull back, we took the buy and it absolutely ripped in our favor. But how do we know that we didn't know? We looked inside of the XLF in the basket, and most of them were, like I said, like 5 out of the top 15 or so were throwing that same setup of the big ones, and then the XLF itself was throwing that same setup. So if you notice right here, we're in green territory, indicated by the weekly trend going green. We got a red candle right here, crossed above the high on this day. So I knew I wanted to get in a trade. I was like, man, this thing is probably going to run because 5 out of the 15 are stacked that way, and they're already triggering. Boom, 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 like dominoes. They were just running. And then you get this the next day gap. I was like, yep, this is going to be a gap and go. Slight pullback, and then keeps going. Now the beautiful thing is we're still in this trade to the upside, and we're just gonna ride it out. But really liking XLF. We've talked about this one considerably in the last videos, right? If you're seeing what I'm talking about, let's hop back over to here. So this is again the reason why we do this. If we go to XLF, let's pull it up here. Right, you go to XLF, you look at the holdings. These are your big boys: Berkshire, JP Morgan, Visa, MasterCard, Bank of America. All these guys are in that flex grid that you saw. All these guys are in that flex grid. Now, if we go look at the flex grid, excuse me, if we go look at that flex grid, there it is. You get your big boys there in the top. The only difference is what happens when all of them are throwing this very similar setup. There's your setup candle right there. Boom. Right? Gapped above and kept going. Let's go to Wells Fargo real quick. Right? Wells Fargo. Same setup right there. Nice juicy red candle. It's almost the identical chart. Goldman Sachs, GS, Goldman Sachs, GS. Go take a look at him. Very similar setup right there. Boom. Right? You don't get an opportunity. You don't get it on that clean trigger. You almost have to get it on this day, kind of the same day we got it. Goldman Sachs ripping to the upside, right? We can go look at BlackRock, BLK. Very similar setup. Didn't necessarily have the follow through that the rest of them had, but you're seeing that nice juicy red candle kind of in the same vicinity, right? If you're catching my drift, they're all kind of rolling in the same direction with the same setup, and you get this nice boom to the upside. So in case maybe BlackRock doesn't run as far as Goldman Sachs, but you don't really care. Why? Because they're all growing inside of what? The XLF. They're all growing inside of the XLF. So the beautiful part is it rose, it fires, you take your profits. It's a good day for everybody. Loving that. Moving right along, we're going to take a look at some utilities. Cool. So one that we don't necessarily, we normally check a lot of these on the Sunday videos. We're not going to check every single one. We just want to check our outperformers and our winners, right? VST, absolutely massive parabolic move there, right? There is some room to grow in the XLU. That's why it's not the top of the top, but you're seeing some performers. CEG ripping, VST. It's in the bottom left-hand corner there. We'll bring him to the front of the classroom. VST for you guys. Right, there you go. Was there any indication? Little bit, you get a double setup candle to the upside. If it breaks that, it's going to be a bad day, but it never really does. Kind of slightly pulls back, sets up for a nice little squeeze area here. Not indicated here, but it definitely is, right? And it, boom, falls through. Very nice. You can take this from a traditional standpoint. If it breaks above the high of the last week's high and above the 8-period moving average, there's a justification for a clean setup. Now, what do you do? Now stop out below because it's traditional. We're just holding it for highs to highs of the previous pivot, but you'll stop out below the low of that week, and then set your risk accordingly, please. Right, that's if that's something you want to do. What we're looking at now, though, PEG slightly pulling back into its wave, DUK slightly pulling back into its wave, Southern same thing, SRE pulling back a little too much than what we like, though. A little too much than what we like. Watch out for NEE potentially setting up to the downside. We'll bring him to the front of the classroom as well, right? So, yeah, to my point, right? In a downtrend, nice juicy rip up into the wave, moving average cloud there. So look for this to get kind of shaving off the top a little bit. Doesn't mean that the trend's not changing because you have these two support levels here that are already drawn out that it did respect on the previous week. So keep that in mind. You also have Southern. Now we keep mentioning Southern. We'll bring you to the front of the classroom one more time. We also are going to bring to the front of the classroom CEG, just kind of see what's looking at. So Southern SO, we told you guys about Southern and Dominion kind of in the same time span. It did push a little bit, so 2-day play would have worked out really, really nice. Remember, we want to hold our plays for about 2 days to 3 weeks, ideally. We did not take Southern. We did take Dominion. Worked out a lot better. Glad we took this one versus the other one. Worked out a lot better. Now, if you're asking, well, Creighton, why would you take this versus the other one? Right? Why would you take this play versus the Southern play? Well, look how it's set up, right? It did rip. If we're going on the weekly here, coming to the weekly, downtrend, push back up. Now you have an opportunity to take a short play. You're shorting the rip, buy the dip, short the rip, right? Going to the daily. Now, yeah, the setup candle, look what it's respecting. It's respecting that previous price level. It's respecting basic support and resistance. That's why. When you go over to Southern, also taking note risk to reward. Very, very key point. Taking note risk to reward, right? Southern doing the same thing. Boom, right? Coming in, but the rip isn't as juicy as the one in Dominion. The rip, that's really what it is. You got the rip, it is respecting that, but the risk to reward also is a little tighter, or a little wider, excuse me, on the Dominion trade versus the Southern trade, right? So what do I mean? So if you take the short at 84, and then you even if you take it down to 80, you're looking at $4 of movement, right? When you take the trade at Dominion, a little bit more risk to reward there, right? 55 all the way down to potentially 52. So about $3 of movement there. But the likelihood of it doing that, because it's a lot wider, if you look relative to where it went to before, is a little higher, right? So I'm expecting to get down to its pivot, but I'm really expecting it to get down to the next level. You know what I'm saying? So there is that. If it gets down to its pivot and the next level, there's no potential chance for fall through. It could bounce and react, and then the play is good and over, right? So Dominion has a lot more legs, in my opinion. Yeah, I can get down to the pivot, but your next level is down here on the 50. That's kind of the point. That's really the point. A lot more legs there potentially, and I mean, either way it goes, we've already like taken a lot of profit off the table there. So if it continues to fail, shout out to us, right? There it is. So guys, thank you so very much for joining me. Like I said, we really like these Sunday videos because we can kind of bring some of the things to the front of the classroom that we thoroughly enjoy to look at, especially with the sectors and the end plays. Those are my favorite. But just kind of keeping our pulse on the market is really good. You should do that like every week. Keep your pulse on the market. Make sure you guys are journaling your trades on your step on this journey. Each step is classified as like 5 trades. So if you take 4 or 5 trades, that's a step, and you want to improve every 4 or 5 trades. So what can you improve on your trades? You can say, I want better entries. I want better risk management. I want better discipline. Those are things that you say, hey, I can take these new steps every 5 trades. I need to improve something. And you have to be able to track from the last 5 trades to the next 5 trades what you're doing, right? How are you going to know if you're improving or if you're getting closer to your goal if you're not tracking it? So, guys, appreciate your time. This is your boy MC Fire, and we'll definitely be taking a peek at the markets. This week might be a little tight for me because I will be rolling to jobs this week. So if you don't see a live, tap in with us. We'll still be making a market video on the other regular days for the week. So shout out to you guys. You guys have a good one. Take care and bye bye. Peace.